It was a little bit last minute, but we made it happen. Sam Dean here, we've known each other for a few years now.
Yep.
And we were connected through mutual friends, but more importantly, one of the main reasons that I engaged Sam many years ago was to have a look at my numbers. And so that's one thing we're going to talk about as a small business owner. To be honest, when I started business, I had no idea about my numbers. I should be looking up here. I had no idea about my numbers. I really looked at it as it'll sort itself out. I didn't really understand how to systemize it either, or really understand what my P&Ls were saying or anything like that. I was just like, make sales, try not to spend too much, and hopefully it all comes together. Right? And sometimes I get a notice from AATO telling me I need to pay for something called BAS. And so I realized very early on that approach was not sustainable. And I suspect that, and I actually not suspect, in my conversations with a lot of different business owners, they don't have a good handle on their numbers.
No.
Right? And so I guess what we want to talk about today is around, how do we create a simple system for business owners to keep on top of their numbers? And what are the key things that they need to be looking at is it a weekly, monthly, how often do they? So hopefully we've got some actionable tips that we can come out of this from. But before we start off with that, I'd love for you to give a little bit of a spiel about your background and your experience working with businesses of different sizes.
Fabulous. Well, as a business owner myself, I understand. I'm an accountant. I've been now even a chartered accountant for over 30 years. And yes.
We shall not hold that against you.
But I don't actually do tax. It's been about 15, 17 years since I've done tax per se. I've recently acquired another tax accounting firm and I've owned them. But my passion in life is to make sure that people really love and know their numbers and put just as much strategy and love towards them as the other parts, as you said, sales, staff, humans. Numbers are a big thing. It drives us. It is our ultimate KPIs when it comes to businesses, profit and loss balance sheets, etc. A lot of fear around numbers because obviously there's judged. So my background is, obviously I started my career in the 90s, before everything was fast and furious, when I feel that perhaps the accounting industry was a little bit more broader because we didn't have GST and all of that other legislation. The biggest problem in Australia is that people do kind of look at accountants and numbers and tax. So people prepare their profit and loss balance sheets, their zero files and everything for the primary purpose to do the BAS, which is a business activity statement that you need to lodge quarterly or monthly to report a tax. And then you need to do your income tax at the end of the year, which is just one moment in time. And tax is just an expense, it's a tax. So the other numbers kind of go on the wayside. What you need to do to change your numbers, all of those sort of things, I think missed by a lot of people. There's a lot of reasons for that. 83% of businesses, according to Xero, under the $2 million mark, don't understand or even, I'm going to say, respect their numbers. Like the data's dirty, we kind of just do things. We get other people to do it, which is fine too. But you really need to know your numbers. And I think we're going back to it to actually find joy in your numbers. You need to be able to connect them back to what you find joy in, in your business. So if your business is to make a certain amount of money for you, we work with a lot of people who don't really even know what
that means.
Well, they want to take out of the business. So if you don't have the end in mind with your accounts, it's always going to be a chore and you're going to end up somewhere that you don't want to be. And I think that's the actual intention and the strategy up front is missing a lot, because we kind of think and we kind of do numbers as the last thing. It's boring, and all of this sort of stuff. But there's a lot of things in life that we do that, like when we're losing weight, or we're measured by numbers there as well. That we do little things all the time that leads us to a result. So we need to understand what we want our numbers to look like first.
Yeah.
And that may be as simple as, I want to be clearing $1,000 a week. I need to pay my school fees. I need to pay this and that. And then you work backwards from that. And then you talk about the tax and you talk about that. So it could be, I want to create wealth, or I want to share wealth, or I want to spend less time working, more time doing community work, coming to a pub, or whatever that may be, because we're actually sitting in a pub today. So that's why I mentioned that.
I want to be able to hang out with Sam and on a Wednesday at your Monday markets. And what does that mean? That, what does that mean from a financial perspective, right? So it took me a long time to really understand that it was such a big part of goal setting.
Yes.
You mentioned that, people sort of go, what are you talking about? What are you talking about? My goals and my, what do I want to take home? And
yes.
And it was when I said that mindset shift around, okay, well, this is actually helping me understand what are my targets towards my goals, not just only my financial goals in my business, but my personal goals in my life, that I started to really find joy in my numbers, as opposed to running away from it. Because for a long time, and I'm pretty sure I'm not the only one here, it was really head in the sand. I was like, make money, okay, revenue. I had to be honest, or really understood where I needed to pull back on operational expenses. And also be able to understand, well, when do I actually need to spend to make money?
And not just go, I'm spending money, I might be making money. That is a myth. But and sometimes you do have to invest in capital. And I think time's the same as well. Sometimes you mentioned systems. Sometimes you have to sit back, spend much more time in system to get the 10, 15 time benefit. It's the same with money, systems and everything. You spend a lot of time, and you mentioned revenue. I think in training and coaching and everything, I think there's like an 87% more spend on marketing and sales training than there is on financial training. Now, everybody needs to know their numbers, but not necessarily everybody. You need both, definitely. I'm like all of it. You should spend that extra spend. But you have to, do your tax return. You have to do all of those things where your numbers lead to as well.
Yeah.
So it's a really interesting cycle we've got. And if you can really work with that, if you can go back and say, okay, well, why am I in business? And I want to make money. It's not good enough. Like, okay, I want to make, my personal goal is I want to pay $1 million in tax one year. And, just work back the numbers on that. So that would be me great joy. It means that I'm employing a great man. My big thing is to empower, particularly rural regional women, to get great jobs within the accounting kind of space, teach them that. So to do that, we need to be making that kind of money to support. And it's a funny goal, but it's kind of one that pleases me because I'll be making a lot of money, and I have a very expensive hobby, writing dressage courses.
It's true.
And also I'm supporting the business and stuff, not me personally, but that's my business goal. So if you've got goals like that, when it becomes hard and you have to clean up your accounts, or you've got somebody who's saying, well, we can't really even work with your accounts because your receipts are everywhere, your zero's in a mess. Zero's an accounting program, and you're not getting that data, you're not respecting it. It makes it much easier when you are at the fuel stop and you do click the app to upload it, so that all the people assisting you. I'm also not saying that you necessarily need to do your own bookkeeping, never do your own tax, but accounting and stuff like that, you can if it finds you joy, but you have to understand it, because then you know the type of people that you need to then have. Also, everyone's numbers and what drives them is different. So I think one big problem we have with accounting and bookkeeping and budgeting and all of that sort of stuff is everyone's trying to shove themselves into the same box. My numbers I concentrate on are very different from what yours would be.
Yeah.
I know if I make 5 calls a week, my numbers drive, and I can do that. With yourself, you're talking about operations. You have a lot of staff, so you might have different numbers and different things that you keep an eye on. But they have to connect back to what finds you joy.
Yes.
And you've got to work strategically to say, okay, I might want to do $100,000 a year take-home pay. So that's what you get in the pocket, not $100,000 a year profit. It's very different. What do I need to do every day that I can cope with? That's a small thing to get me to that. So that's the problem. It's not, oh my goodness, I have to sit down and do my accounts, or oh my goodness, my accountant's missing again. All that stuff is very fatiguing, and it's not great. So knowing what you want and then working with somebody who can bring it back to something that you can connect to is super important.
Yeah.
It's the same with weight loss. Anything you're trying to do that's uncomfortable, and this isn't the most comfortable thing in the world. Unfortunately, we are in a capitalist society. We are judged by our numbers. So there is always that guilt and fear that we have to work to. Go back to those numbers that you can work with. And also that it's not a big deal.
Yes.
And also another thing, you look at the world right now, how stressed everybody is. One of the big stresses is numbers and not having enough money. I've worked with a remarkable amount of people who are stressed about numbers and money. It didn't need to be. It was lack of education.
Yes.
Now, not everybody. It's more the other way around, but there is enough, like 40, 50% of the people I've worked with. And even if you are in strife, if you've got a clear plan how to get out of it, you do sleep at night at that point.
Yeah, and so many people, like you said, if they're in strife, and often they're in strife because they haven't been keeping an eye on the numbers, right? And it's more so around going, hey, that education piece of going, did you know if you pulled this lever, or if you did this and did this, we could actually tip things back a lot easier, but we need to understand our numbers. So I guess one of the first things to make sure, and I'm talking about sort of the basics, one, you've got to make sure that you've got an accounting software to begin with.
Something to track. As long as it's clear, you don't have to necessarily have the zeros or the myods yet. When you get more transactions, more numbers going, yes, you need to go there. But I think everyone kind of goes all in. If you're starting up a business or thinking about it, start with a simple receipt book. Start with a simple, even old style one, or an Excel spreadsheet. Everyone has Excel or something like that. Then kind of track it to say, am I earning more than I'm spending? As simple as that. One way to think about that in a business without even doing the spreadsheets is if you've got any debt that you're not paying back, like a credit card is usually the big one. You're not sweeping every month. You are spending more than you're earning.
Yeah.
Now, you have to then look at that. So start practicing even when you're thinking about starting up. Start practicing when it's small amounts. And then when you start up a business, for sure, get some training. Go online. Go to YouTube. We run free educational workshops, stuff like that. Get some training. You don't need to spend money. If you do have an accountant that you trust, ask them the question, can you sit down with me and go through it? Do not work with anybody, accountant or otherwise, who doesn't speak in a language that you understand.
Yeah.
If you go out of a meeting and go, it was accounting, so I don't really understand it, get back in the meeting or get somebody else to explain it to you. Really good advisors of any type. It doesn't, not just accountant, lawyer, anybody, gym, PT trainer, whatever. If they're not speaking to you in the way you need to be spoken to, and you're unclear, these are your numbers. They are your numbers. Don't blame the accountant. Don't blame the tax department. Don't blame anybody else. Find somebody who will actually explain it to you.
And be okay to say, can you just explain that in plain English?
Yes.
Because often it's so easy when you're in the mode of your particular profession. It's so easy to speak in in jargon, right? Cost of goods sold and things like that. And I went, so what does that mean if I reduce this? What does that actually mean I need to do in my business?
Yes.
I need to understand, you need to understand what actually you need to do in your business to move needles up or down. So we talk about having something to track, whether it's a zero or a mile or just a plain, spreadsheet of some sort.
So you're building the muscle then.
Yeah.
To track, because no one goes into business to stay at the start.
Yeah.
So you want to,
Which
put habits in.
This comes up very often. At what point should a business owner start to pay themselves, and how? And when I say how, because there's PAYG, you can do director's drawings. What are the differences? And this.
So let me step back one. First of all, you need to understand what you need to survive as a person, whether it be a family or anything. So when you're starting up a business, sometimes it's, well, I'll go into business, I'll put $20,000 into it, and off I go, but I won't pay myself. Make sure that you know how long that runway lasts for and how much you need, because you might need to supplement it. You might need to say, well, my business can't start paying myself or whatever. You always need to know what your take-home pay needs to be. So you need to aim. So you got something to aim for.
Yeah.
It won't manifest otherwise. The next thing is to understand the difference between what you take out of the business, what the business is giving to you, that if you're an employee, it would be after-tax dollars as opposed to that. So if your business, you can legitimately have a car in it, or it's paying all your telephone bills, but you don't really need the car, but you can legitimately use it in the business, but you are then using it for personal. If you were working, if you're working for another property developer, say, you would be after-tax dollaring that. So you need to consider, you might already be taking home, you might be already paying yourself something. More than you think.
Yeah.
So you need to have an understanding of that. Now that's a little complicated. Obviously if I had slides and stuff, I'd get a bit detailed. I am going to offer anyone who wants to talk about it a half hour. Let's have a quick look at your take-home pay, because I think that's always a good, I call it take-home pay.
Yes.
It's like what it would be. So that's it. Then you need to say, what does the business need to keep in it so it can grow? So you said before, money. How much money do I need to spend to make more money? You need to understand that if you're growing a business, you're going to have marketing costs. You might be putting structures in from a tax point of view. You might be putting in software or getting training. So you do need to reinvest money all the time in the business. A business doesn't grow if you just take all the money out all the time.
Yeah.
Doesn't matter what stage the business is in. So you need to understand that. So the point, it's an interesting point. It also depends on the type of business. If you've got a consulting business, you should be taking money out of that immediately.
Because you're the person.
Because you're an alpha dollar thing. It's really a job until you start employing people, or you've got an education, or you've got something. So you should be definitely, that type of business should be making you money to take home immediately. If you've got a business that requires a lot of stock, stuff like that, then that's a different ballpark. You might need to look at, well, I need this much money to survive, so I need like $40,000 worth of capital to buy my startup costs, stuff like that, or to pay it all. So it does depend, but you always need to say, at some point, I want to be taking X amount of money out of this business. How do I get there?
Yes.
And at what point do you say, I'm not going to get there as well?
Okay. Yes. That's a fair call as well, because you may be consistently putting money into the business and you're not getting.
And it might not be a business. At the end of the day, to a real business, a business that's valuable is not relying on the owner. Most businesses in Australia are highly remote or not even relying on the owner, relying on any role or person within the business. You need to get your business to a point that it's not reliant on you as an individual, more than anyone else, then you've got a valuable business. And then you can be paid taking investment money out. So not just take on pay, because that should be commercial, it should be get to a point. So what I mean by that is if you're taking $50,000 out of a business and you're happy with that, but if you had to replace yourself, it would cost 120. It's not good. Go get a $120,000 job, like realistically at that point.
Yeah.
So it just depends on what you got. But if you're then got a business that's making lots of cash and you're taking 300,000 out as a salary, that's actually reinvestment money. It's actually investment, like 150 might be your salary and then more. So don't think about how the accountant sets your tax, sets your salaries up, or that as what you're taking out of the business. That's just getting the best tax result. But you need to think of what all the things I'm taking out of the business, and is that little or not.
So that sort of could be PAYG pay, and then you've got your profit as well.
Yes.
Because that profit is yours.
Yeah, well, that's your investment from your time and effort.
That's right.
Most people who start up businesses in the early kind of discount that as non-investment. So you guys mostly are in property. You go and buy a house, and you do renovations and stuff. You've got more of a monetary value on that. Whereas when we set up a business, it's blood, sweat, and tears. We need to put a value on that. It can be very subjective, don't worry about it. But if you go to business and you work on it for 2 years and it's cost you a lot of non-monetary stuff, marriages, etc., you want to be looking at something that will return that investment, because at some point or other you might need to say, I'm done. So you've got to think about all of that, the different styles of how a business can pay you off.
So is it right in its simplest form to say if someone had a target of $200,000 take home, or I need to be earning 200,000, from my business, would it be logical to say, well, that might look like $80,000 in PAYG and then 20,000 of other, phone and car and everything, and then you've got another 100,000 in profit. So that could actually, it's not necessarily your PAYG is 200,000. It's one of all the elements of that pull together to add up to that 200,000. I have been listening.
That was lovely.
Was that a good?
Yeah. We should tag team before, because Cheryl just simplified it nicely.
I said it in the
and you used acronyms too.
The plain English version. And I think that's the part where I do find quite a lot of business owners don't know when to, in a structured way, to take money out, which also will be helpful if they need serviceability for the loans and so on and so forth. So, as soon as you're able to sit down with your accountant to start planning that. Yeah, I think it is a planning conversation.
Yeah, and also you need to ask your accountant, because a great tax accountant won't be a good strategy accountant necessarily. Some are. There's the rare one, but accountants have different strengths. A tax accountant is great at getting your tax done, making sure you don't go to jail. A strategic accountant, which I'm more the side of, is that they should all work together too, because accountants are not GPs. They sometimes think, they are. Well, no, I think the market thinks we're GPs as opposed to general practitioners, because numbers, how to run my business, or know how to grow it. It's not true.
To fix it.
It's unfair.
Yes.
But you brought a really good point back before, is that, really make sure that you do discipline yourself. And when you have a budget, and the budget can be simple, it's like, I need $500 a week. I'm only going to take $500 a week. And another very important thing is separate your business accounts from your personal accounts.
Yes.
That is really important to do. Even if you're trading as a sole trader, which means you're trading in your own name, have a business account that you take a $500 amount out every week. So that will start the budgeting process. And if you can't afford that, you need to act at that point, as opposed to just having a slush fund.
Yeah.
Slush funds make it very difficult for accountants later on to get the quality of information they need to do the tax. It also makes it very difficult for you to make any valid decisions on your expenditure. The 58% of businesses in the US, they go bankrupt not because they're bad businesses, because the owners spend more than the
Spend too
businesses are earning personally.
Because they see all this money come in,
Yeah.
and they're like, they
But-
don't have a real gauge of what's going out because they see all the money coming in. One,
Also, there's always a delay.
yes,
So you might have, if you've got a sales orientated business and everyone pays immediately, you might have a big amount of money in the bank, but you've got tax on that, and then you've got your PAYG employment costs, the creditors, all that. So there's always, just because you've got a lot of money in the bank doesn't mean you've got a lot of money.
yeah. One little habit I put in place pretty early on was to have, if you're familiar with the Barefoot Investor, he talks about little buckets, right? And
Same.
so a similar thing in your business, having buckets. So every week, actually, I'm pretty diligent. I've got a little reminder that says, put in your buckets. So I've got my GST, I've got my little profit bucket, I've got what I'm saving up for example, if there's a particular thing that we're saving up for. So I'd encourage you to do a similar thing, particularly with GST, because that's going to be a little bit deceiving because you think you're actually getting more than what.
Yeah, you're acting as a tax collector for our government.
Yes.
And whatever your opinion on it doesn't really matter because you just got to do it. And the other thing is I think where people really get in trouble, because that's 10% of your turnover, 1/11 really, is your employees' wages. So you're quarterly putting aside money for them. That probably gets people stumped if you've got employees for the first time. You're not used to that because if you've been an employee yourself previously, that was taken care of. So know that every time you say pay an employee or even pay yourself as an employee, put 100% of your gross salary. So you divide the check up. Sorry, I was around when checks were here, but if you've got a gross salary of 100,000 plus super of 12, so say 112, put 12 away immediately. Put the PAYG component of it, might be say 250 away immediately, and put the rest into your bank account. So they actually swing to the bank accounts as you do payroll.
Yes.
There's two reasons you should do that. One is you will never get in trouble from a cash flow point of view. Two, that's where the ATO is going.
Yeah.
So super streaming, all of that stuff that's happening, eventually that'll also happen if they do it with PAYGW or what your tax on your employees' wages are. Now, obviously, the whole SME market in Australia will go bankrupt, but they want to get to that point. And I actually agree with that because it's not our money at that point. It is our employees' money, or if it is yours, it is, you still have to pay yourself super. You still have to do all that stuff if you are paying yourself a proper salary. Yeah.
But if you're using things like Xero and all of that, that should be, there's a little button, single touch payroll-y thing that
that's
the reporting.
That's the reporting. There's not, you're still paying your accounts at this point. AI is not doing it all. So you still have to have the discipline to actually shoot them into different bank accounts or have your system do it. Yeah. Xero doesn't really have a function at this point.
And so that's the part of going, you need to sit down and create that system around even how you're doing your accounts and you're paying all these bits and pieces.
You don't want to think about the buckets. You want the buckets just to fill.
They just do their thing. So if you don't have that in place, I think it's really important that you reach out to your accountant or someone like Sam who can sort of look at that and do a little bit of forensic accounting or whatever to work out how to create a bit of a structure around your numbers. And really understand, right? Really understand going, looking at those expenses. Do you need this? I mean, how does this, what do we need? What do we need there? And could you be actually making more if you didn't have this? And so I think that's that strategic piece of going.
Well, also
Yeah.
top line. What I mean, top line is sales.
Yeah.
You mentioned then cost of goods sold, which is how much is it cost for me to get $1 in sales. So there's always costs that you have to have that will draw $1 in sales. So that's in the middle line. And then bottom line is after all operating expenses.
Yeah.
Just the tip to take away from today is go through your monthly, 1 monthly or 2 monthly statements, get all of the things that you've signed up for digitally over the last, say, 3 months, and unsubscribe from them all unless you're using them every day. Because we have I don't really need that cost. Now you're paying it $100 a month and you're not even worried about it.
Yeah.
But then that's $100 a month. So if you've got a margin of, say, so if for every dollar that you sell, you only get to keep 10 cents, you then save yourself on $100 operational, $1,000 in sales.
Yeah.
So that might decrease your workload. I mean, that's a very simple example.
Yeah.
So you need to understand you do not spend any money. And look, something that's nice to have, get rid of it. You can always unsubscribe it again, right? So just really go through, and I always say do that. It doesn't require any more sales calls. It doesn't require any more work.
Yes.
Just an hour saying, do I really need to be spending this money? And subscriptions, I think, obviously have been great, membership subscriptions and whatever, because you look at a $60 a month thing and go, that's okay, it's a dinner.
But it all adds.
But it's 600 and it's 720 a year.
Yeah.
Now, if that 720 came across your desk, you'd go, it's not that nice dinner, you know. So that's what you've got to look at. That is a real catch in the modern world, because we do, and then we'll go, okay, I'll try it free for a month, and then
Forget.
Yeah.
Forget.
We all do that, like all of us.
So Sam, let's start to sort of wrap things up, and for those of you who are thinking, little wavy, how can someone like Sam help me in my business? I'm a small business, but I am growing. I do want to keep on top of my numbers and understand it more and be more strategic. What does that look like, and how can we help?
Okay, well, first of all, I always try to help by just having a half-hour free call and find out actually what your goals and aspirations are. Like, if you don't really have any goals or aspirations, or, you know, maybe that could be a really quick, valuable conversation to say, you know, I can't help at that point. Like, that's a good thing. Some people use that half hour just to get a few tips, and I'm more than happy to do that. The more successful business owners that we have. The way we help, though, and not just me, but my teams, and I'm sure there's other people out there doing it as well, is to find out that you do have a purpose and a goal in mind first. Because no matter what you do, if you don't know where you're going, it's very hard to get people to help you to get there. Because you always end up, you know, we had a very good goal to get to your Monday today. We got here. Now, if we kind of said, it doesn't matter, we'll meet somewhere.
That's right.
We wouldn't have got here. We wouldn't have had this meeting. So make sure that anyone you work with, whether it be, always knows what your end in mind. Also, understand what your end in mind is. Like, a lot of people don't understand that from a business perspective. So that's how we help first, is make sure you have a clearish goal. Goals change, of course. And then find out where you are right now. Get really honest as to where you are right now. And so we know which steps to take. Sometimes the first 2 steps, sometimes the steps are, we need to shut you down.
Yeah.
Like, this is not going to work in its current form. Let's do something else. Because you could have a goal to spend more time with your kids. And that's your short-term goal because they're young. But your business goal is to have this amazingly high growth business over the next 2 or 3 years, flashing goals. Now, you can go and get a great job and chip away at that on the side so you can work 4 or 5 days a week. Or we can just build the business slower, or whatever that is. So we need to get very honest on where you are right now.
Yeah.
Then the big thing to do then is have someone help you step one, then come up with a plan. So we do all that in 1 or 2 sessions. Now, sometimes people will just take that plan and keep going with it because you need a clear plan.
Yeah.
Sometimes we'll help more. Sometimes we won't be able to help. If somebody needs more advice around marketing or something, they're pretty clean in their financial statements. We'll send them to someone like yourself. So that's how we help. But everything's a little bit different, but we are systemized in our approach on how we need it. I think too, you need to go to people who can actually not just have one set thing. You might need a group session might be better for you because you're starting off a business. Really feel as to what it is that you need. And if you're terrified of accounts and stuff, go find somebody who will sit in the moment with you and help you with that fear. I think a lot of people, it's actually all fear-based. Yeah, once you get over, you never get over it, but once you kind of work, I've had times when I realized I wasn't in love with my numbers all the time, only when they look good.
Yeah, exactly.
And you've got to love them all the time. It's like your children. You got to love them unconditionally.
Be tolerant of them and not hide away in the closet. I think that's, and I've been there. I'm a reformed, head in the sand account person where I just went, I can't keep doing that because I got into trouble. Yeah. But then here was the thing, when you're empowered and you understand the numbers, you find a way to get yourself unstuck.
You can get yourself unstuck, and also you need to know, then you know what people you need around it. Like I would never have suggested to Cheryl to do her own bookkeeping. Like that would have been a mistake. But you all have to every business person needs to understand how their numbers function.
Yeah.
How the mechanics of your numbers work. That's on you.
Yeah.
And you need to find people to help you.
Absolutely.
And until you find those people and they speak your language, might not even be me, whoever it is, help. It could be reading great books, and I've got a suggestion for some of them as well.
Awesome. Okay. Well, Sam, we need some time to sit down and chat and have some lunch too. So there's plenty of really good little nuggets there to take away. I think more importantly, as everyone's situation is different, every different business sizes, team sizes and dynamics with your numbers. Take the opportunity to sit down with Sam. How do they do that? They can book a time with you.
They can. We'll put the link up to my calendar.
Awesome.
Please note that the Blueprint HQ logos and stuff that you're seeing is it's still my business. It's my strategy business, but we'll be doing this through AK Accounting, which is the accounting firm. But the booking and everything will be through that because I don't avoid my numbers. I do avoid my LinkedIn and all of that, all the marketing stuff. So Cheryl's going to side. So
that's right. We're going to have another talk about that.
So
need a good
everybody, no one is strong over everything, but as business owners, you need to at least know enough to get the right people.
Yeah. So Rafiq's put into the chat the blueprinthq.com.au website.
There's a book, book with Sam.
Book with Sam. Book with Sam. So thanks, Sam.
No problem. Just finally remember, guys, go look at your last few bank statements and get rid of all those subscriptions you don't need to be paying for. That's the tip I'll leave you with.
Yeah. Just rip them out.
Yep.
Cancel. Email them and say stop subscription.
Yep.
All right. Well, thank you everyone for joining us on Business Maximiser this week. I hope you found that valuable. Reach out to Sam if you want a fractional CFO on your site, having a look at your numbers and helping you keep on top of that. Incredibly valuable, and again, allowing you to get closer to those goals that you've set in place financially and personally. So we'll see you again. Have a great day and ciao.
Bye.